Welcome to my channel, Learn and Earn, to live your life on your own terms. Hello everyone, you're welcome to my channel, Learn and Earn Academy. And today in this video, we are going to talk about the difference between pledge, hypothecation versus mortgage. What is hypothecation? We'll discuss it with an example. We will explain the difference between pledge and hypothecation, mortgage and hypothecation. So let us understand first what is hypothecation. In a very simple example, if you go to a bank to borrow something and the bank asks you for a collateral, you give your bike as a collateral. So the bank will hypothecate your bike and will give you the loan amount. By this, what it means is the ownership and the use of bike will be done by you, but the actual ownership of the bike will be with the bank. So in case you default on your bike loan, the bank will have the right to sell your bike and recover the amount. So you have hypothecated your bike for a loan amount. This is called hypothecation. Hypothecation is always on a movable asset. Anything which can move can be hypothecated. For example, if a big company comes for a cash credit loan or a working capital loan, they hypothecate their stocks. Stocks is something which is movable. The company can sell the stock and can raise the money. In case the company is not able to sell or not able to repay the loan of the bank has the right to sell the stocks. So in this case, the bank has to take the possession of the stock first. Similarly, the bank has to take possession of the bike first and then sell it to recover the loan amount. So I hope the concept of hypothecation is absolutely clear. I'll give you the definition of hypothecation. It means offering an asset as collateral security to the lender. The ownership lies with the lender and the borrower enjoys the possession. So if I am giving my bike on hypothecation, the ownership will be with the bank, but I will have the possession. In case of the default by the borrower, so in case I default, the lender, which is the bank, can exercise his ownership and can seize the asset, can take my bike. It is usually done in case of movable assets for creating the charge against collateral for the loan given. Under hypothecation, the possession of the security remains with the borrower itself. Hence, if the borrower defaults on the payment, the lender would have to first take the possession of the security and then sell the assets due. So, if I have to give an example of hypothecation, the example would be a vehicle loan. So, the vehicle remains with the borrower, but the same is hypothecated to the bank. So, if there is any default by the borrower, the bank takes the possession of the vehicle after giving notice and then sells to recover the amount. Now, let's talk about pledge. Now, pledge seems to be similar as both are types of charge created on movable asset, but there is a difference between pledge and hypothecation. So, what is the difference between pledge and hypothecation? Now, pledge is something wherein you give the ownership to the bank. For example, you pledge your gold for a loan. So in this case, you will give the gold to the bank. The bank will keep the gold in their security and give you the loan amount. So in this case, the asset is not with you, it is with the bank. It is pledged with the bank. But in the case of hypothecation, you were using the bike. But in case you defaulted, then the bank had the right to take your bike and sell to recover it. But in case of pledge, you have to give the possession of your gold in favor of the bank, and then the bank will release the loan amount. So the possession of the asset remains with the lender, that is the bank, in case of a pledge, while it remains with the borrower in case of hypothecation. So common example is gold loan in case of pledge and vehicle loan in case of hypothecation. So these are very simple examples which you can understand. Now let's talk about mortgage. Mortgage versus hypothecation. Now, mortgage is also a way wherein you put your asset in the bank books. This means the possession remains with the borrower. However, in the mortgage, it is useful non-movable asset. Non-movable asset means a house, a piece of land. While hypothecation, we have already spoken about, it is for movable assets such as vehicle. So, a very simple example of mortgage is your home loan. So, in case of mortgage, your home is kept with the bank as security. So, if you're not able to pay the loan, in case of mortgage, the bank will take the possession of your house and will sell it to recover the loan amount. Now, what are some of the alternate assets of hypothecation? Now, it can also be done for investment or stocks. This is a common practice in stock trading, better known as margin lending. In such a case, the buyer buying shares on margin places his existing share as collateral with the brokerage firm. These shares can be sold by the brokerage firm if the buyer faces the marginal call. The margin call is received when the value of securities bought decreases more than the certain limit of the amount or the account value reduces. Let's talk about documentation. Now, this activity usually requires an agreement to be made and it is known as hypothecation deed. Hypothecation deed is an agreement which contains standard feature and rules which cover the following points: definition, insurance, inspection rules, rights and remedies of each party in case of default, security details, sales realization, etc. So, if I have to give you a conclusion, hypothecation is a route by which the borrower can raise funds by providing security which is movable as collateral and still get to use it since the possession remains with the borrower. This source of loan is given by the bank or the financer at a rate lower than the unsecured loan as it provides a sense of security to the lender. The lender runs a risk as there may be instances where the borrower sells off the hypothecated assets without knowledge of the lender. However, periodic checks and proper clauses in the deed can provide protection to a large extent to both the borrower and the lender. So if you like this video, you can press the like button, subscribe to our channel and share it on social media. Help us to spread education in this beautiful world. Thank you.